Well, a little bit of a sell-off yesterday. That puts our Friday closing the week on the high, all-time high scenario in a little bit of jeopardy, but that's only 30 handles away. Do that in no time. We could talk meme stocks, GME offering. No one saw that coming. Others earnings take two. Took Dennis for a ride on that one. He'll tell us about that. Options expiration, when you should pay attention to imbalances. This is Friday. We're wrapping up a wild week here on Pre-Market Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. Good morning, traders and investors. Let's just call it flat here, just above that close at 53.20.50. The buck is up 30 cents, 104.65. Not much there on the chart. Nice low yesterday at 104. TLT steady at 92.02. Crude can't get back over 80, down 36 cents at 78.87. Gold up 880 at 23.94.40. Little roadblock there, 2400 ahead of the all-time high. Silver, that's got a 30 handle on it, folks. That's up 17 cents at $30.04. And Bitcoin's not having a bad day, kind of bouncing around in the 60K handle. That's up $1,000, a little over. It's 66,740. Am I excited to talk to Triple D this morning? You must have been having some fun in the after hours. You must have been having some fun in the pre-market.
Yes, kind of. I'm depressed because the Oilers lost last night, but I'm sure it's not a sports show, so we won't even talk hockey.
Is it 3-3 now? 3-2?
They're down 3-2, yeah, and they played like crap. Like every game they've played pretty good, and it was like goaltending that was potentially, costing them a couple of games. Last night the goaltender was fine. They're playing the other goalie, and the team was crap. So Vancouver looking good. 78% of the time, the team that wins Game 5 when the series is tied wins the series. So we're only looking at a 22% chance. But we do have McDavid, so maybe he'll turn around and do something. He didn't look great last night. Okay, that's all my sports talk we're doing. Bring in AB here. No more sports talk except for
we need one more sports talk because
the
biggest headline of this morning is coming not from the stock market, coming from the golf world.
Oh yeah.
Jeff Darlington, an NFL reporter, happened to be hanging outside the Valhalla golf course in Kentucky. And, so this morning, Scottie Scheffler, the best golfer in the world, was driving in. There was an accident outside of the golf course. Scheffler was trying to drive around the police cars and everything to get in. He's trying to get to work. He's trying to go win a golf tournament after becoming a father. And the police didn't like that. A police officer attached himself to the vehicle, which I don't know exactly what that means. But
I think I would stop then. I would stop.
Apparently he drove for a few yards with the police officer attached to his vehicle.
Oh my gosh.
The police take him out. The police take him out of the vehicle, take Scheffler out. Darlington posted a video on Twitter of the police officer saying, Scottie Scheffler's going to jail and there's nothing you can do about it. All this stuff. So it sounded pretty serious. I don't think that ended up getting to that point. I think at some point someone was like, all right, well, let this slide or whatever. Because I don't think he ended up going to jail. But either way, just a crazy story, again, at the Valhalla golf course, and that's in Kentucky. And so they're doing, Joel, I don't know how much you watch the golf, but they're doing a lot of, horse stuff and bourbon and all this stuff to again, we got the Preakness this weekend as well.
We'll talk about that. We'll talk about that at the end of the show.
At the end.
Yep. If we haven't lost all of our listeners by now, we
should start doing the sports at the end, I guess.
Stonks.
GME, wah. That's all we have to say. Stock was actually trading up last night. It was trading up 29.5. The memesters were looking pretty good, like they were going to try to bounce this. But the company just harpooned all of that here this morning, coming out with preliminary numbers that are just an epic disaster. And you hear talking about an $8 billion market cap, and they can't hit their 100 or whatever their $1 million worth of sales here, $50 million worth of sales. Preliminary numbers, terrible. And then they harpoon and they shove an offering down their shareholders' throats as well. 45 million shares coming out here. Stock is down a cool 19%. Forget about those 8 a.m. prints that we know are from last night. You can see where it was trading last night, which is pretty cool on Robinhood, because when you see all these prints go by, those were your Robinhoods at $30. Yeah, $31.
Right here.
Yeah,
right here.
That was last night. Yeah, that was trading up there last night when everybody was sleeping, during the after hours, but not anymore. It's 22.50 is the active market here. You're no longer getting 31, 30, 29, 28, 27, 26, 25, 24, 23. You're now getting 22. And if you're chasing this type of stock, you were doing it wrong. If you're investing in this kind of stock, you're doing it wrong, folks. Fundamentals do win in the end here. Company is not worth $8 billion. Not anymore.
Pachter, I should give that over to Dustin. Pachter gave a nice talk, the differences between AMC and GME, and AMC has some cash flow. Maybe they gotta owe that debt someday, but who knows with it? Boy, oh boy. I'm gonna make a technical call here on GME today.
Okay.
Maybe it fills the gap at 20.
I think it's going to try to fill the gap right now. Maybe you buy it at 20 for a bounce.
I'm not saying that. I'm not buying it. I'm just saying, technically speaking, that's all I'm saying. Is what was that high that day? I believe that high before the whole thing started looks like 20 right on the kisser. So what that means, very little. If you were lucky enough to get a short off and or trading options and you did up for the premium, I know that Todd Gordon tweeted out when the thing was around 45.50, he was trying to, put a put spread on, and they kept halting the stock, and it was just like nearly impossible. I hope he got it off. I told him, I go, just leg into it. You know what I mean? You know what happens when you lift one leg now. But anyways, that's a technical look at that. AMC is trading lower too, down 22 cents. That's already filled its gap. So tough technicals on that one.
I mean, and obviously this isn't just harpooning GME, it's harpooning the entire meme trade here. Again, all your memester stocks, your high short interest stocks are all trading down on this news. GME, AMC, what if you want to look at, like, I don't know, just go through, like, Save was one. I'm just bringing them up. Well, it's actually still trading up, or at least trading flat here. It was one that was in the group there too. SunPower was another one. It's trading down. It's across the board, though, for the most part. There's a lot of weakness in the memesters here this morning.
Well, Jay Rice in the chat pointed out that, Rent, ticker RENT, it looks like a lot of these meme traders or people looking for short interest names are going to Rent. So Rent the Runway, if you're unfamiliar with this company, is like a subscription-based company that allows people to rent clothes. So say you're going to a gala or a ball or something and you need a suit, you can rent it from Rent the Runway and then send it back. And I think a lot of women do it because they can, you get a new purse for the weekend or whatever, but you don't have to actually own it. You can give it back. I have thoughts just on this whole industry because I don't think there's one single subscription service based stock that has done well on the market, whether that be, Stitch Fix, BarkBox, like all these things, like for whatever reason, just don't really seem to take off or have or be profitable in the long run. So again, Rent the Runway is a little bit of a different model where I think they do more like higher end stuff and people do it specifically for events and whatnot. But either way, people piling in to Rent the Runway this morning. I think that's a fade for me just because, again, if history tells me anything, it's that the market does not like these subscription-based companies.
Yeah. And there's always one, even, when we're not in memester land, which we've been for the last week, there's always some smaller company, getting some love from Reddit or getting some love from social media and going up, like FFIE, which we called on this show at 7 cents, is $2.70 this morning. I can't believe that. I mean, this is one that they've just grabbed and gravitated to. The thing traded 1 billion shares yesterday, Joel, FFIE. So that might be my best call of all time. Might be my best call of all time. Might be my worst trade of all time because when it went to 20 cents, I was like, ooh, that was great. And then I pretty much watched the rest of the way. $2.70. It's unbelievable. I don't know where that party starts and it stops. I mean, we know what kickstarted it. It was the reason we mentioned it. It was #1 on the highshortinterest.com list. So it was the #1 stock, and they were squeezing shorts. And that's why I mentioned it that day, 4 days ago on the show. I'm like, it's a 7-cent stock, and it's #1 on this highshortinterest.com list. And a lot of retail traders will look at that list. And you know what? That whole list ran that day, and they just grabbed that one, and they decided to just keep running it and running it. I don't know why it hasn't imploded with the others. But holy mackerel, that is just unbelievable move.
And Bigfoot, no, rent wasn't at 450. I don't know if you're talking about the pre-market. The all-time high in rent is 4,000, over 4,500.
Yeah, it's gonna be like reverse split there.
Yeah, I think. Let me go to the data window in case you want to get your order out there.
Runway. I've
4,980 is all-time high back in February of 2021.
Yeah, like this is what happens. And then, they say they squeeze them for a day or two or a few days, and it's been squeezing here, and then eventually it peters out. But again, it's hard to short these things when they're rocket ship mode. Like look at FFIE. If you're trying to short that thing, oh my gosh. It's hard to just be short these stocks that have 86.78% FFIE short interest. It's just hard to short those, be short those things. One, the locate's probably tough, but two, it's like this crap happens like this, and holy cow, man, just if you're short, you're destroyed. But we said it that day when GameStop started going. I was like, if you're short any of these stocks, this high short interest list, you got to be being really cautious here at this point in time because they were in full squeeze mode, and then this thing squeezed more than any of them. So AMC comes down, Joel. All the darlings, GMEs come down. Is it over? $1 million question is the meme stock rally's over. There's always another one going, but is the GME AMC officially over, or do we get another pop? Do they get back to the 60s somehow? Does Roaring Kitty come out, and do a YouTube video or something? Because that would really prop it up. I mean, is there any possibility, any hope for the memesters here? Or is it just, they pissed away their money from the last 3 days?
Pass.
I don't even blame you. I don't even blame you because that's why I was throwing it to you because I didn't want to answer the question either.
Yeah,
AB will go. Is it over, AB?
Yeah,
is GameStop AMC rally? Is it over?
I think the biggest problem. I think the biggest problem here is we even saw this back in 2021 after the big rally and the subsequent fall. There were a couple times in, the following months where they would start to perk up again, the GameStop and the AMC, and people, that were really into it would be like, oh, it's back on. Now this one's going to be the big squeeze and all this stuff. The problem is that once this has already happened once or twice, people start to get a little bit tired of the story. Not to mention the fact that when this first happened, people didn't really have a lot going on, right? Everyone was stuck at home. People weren't, people were working from home. People weren't doing stuff socially. I'm going on a trip tonight with some buddies. I'm focused on that. I've got other things going on to where I don't really care what's going on with GameStop and stuff right now. And I think a lot of people are in that boat that might have even been in it in 2021 are now I'm doing other things. I'm not that involved in the story. So I think that's the biggest problem is that the story didn't catch and stick as well as it did the first time, which is natural because we're all going to get bored of a story we've heard before. And so I think, people, got a little burnt out on this one a little bit quicker than what we saw a few years ago.
All right. One final technical note, and then we're going to move on to earnings. And, you get caught up in the moment, right? And it started on Monday, right? Didn't it start on Monday?
Yeah. Well, yeah.
Yeah. And, you look at the the pre-market trading, and that thing went to $80. Okay, $80 on the nose. And then when it came off, and then it ended up, I mentioned before, it ended up opening at the high on Monday and ended up coming in. And if you don't think technicals really mean anything, there's a little coincidence here because when this thing popped in November of 21, they did a little bit of a squeeze. And that high in that month of November 21 was 63.92. Your high on Monday was 64.83. Now, it's a buck away, okay? But you had a nanosecond to sell that against the monthly high. So if you're trading these things, you're caught up in the moment, you're looking at the crazy pre-market action, maybe just take a step back and say, hey, where was a monthly level on this? To me, monthly levels are more important. But that's what I noticed. $1.55 from filling that gap at $20.
So let's stick with the whole Reddit theme because Reddit has news here too, and Reddit is flying here this morning. They got some collaboration with OpenAI, and the stock just started going up on this last night, 57, 58, 59, 60. It's $62. It's up 10%. Doesn't everybody have a collaboration or a deal with OpenAI though? I mean, this isn't like, again, it's Reddit, so they're going to pump it more, but I don't know if I'm chasing it on this headline, especially with meme stocks imploding here this morning. Doesn't this kind of feel like it's a sell for you right now, this Reddit pop?
Yeah, well, when it got over $66, 66.37.
Yeah. It's
Yeah,
just people just go nuts. They can't help themselves. You know what it's a chase mentality. You know, herd mentality. I got to get in there because everybody else is making money and I'm missing out. This is how Wall Street suckers you in. This is how Wall Street is rigged by, making you jump in when everybody you think is that, I've got to get in this thing, and then you end up buying the high. Stop chasing stocks. That if you can learn anything from this show, even one thing, and we teach a lot of good stuff on this show, don't chase stocks. Most of the time, it does not work. Sometimes you'll find that one time during COVID it did work. Maybe people were chasing GME. Portnoy chased GME for a day from 35 and it went to 60 and he looked like a genius. Now he's complaining because back at 21. So even though he chased and he was up significantly, I mean, it worked for a day and then it's right back down. Don't chase stocks.
Reddit wild stock. The pre-market high. I'll give you that. I mean, that's way up there at 66.37. I would do a reset here on Meme Tuesday, and that high was 64.50. That's still $2 away after you've leaked over $4. So that's a level I'd be keeping an eye out here in Reddit. It's a mover.
So we're saying don't chase stocks, Dennis, and I think that's very sound advice. I'm curious. And I think you got to talk time frames when you're talking this, but let's talk BABA for
all
a second.
Time frames.
Let's talk BABA for a second because, I think a lot of people right now may look at BABA and say, wow, I haven't been in this. It's up 30% over the last, few weeks or so. But when you look at a chart, like a weekly chart or a monthly chart, and I know that just because you're looking at the chart doesn't mean that stocks have to go back to their all-time highs. But if you look at where we are on this chart on the bottom right, to me, it doesn't feel like, this is too late for BABA to get in here because, I mean, like, again, we're up 30% from it got below $70 a couple weeks ago. But I think this thing is still on its way to at least that $120 level. And so I wouldn't think that like getting in on BABA here would be I mean, you're chasing a little bit. Don't get me wrong, especially because
you're making a good point here, and I think that's one thing that we really got to figure out with our broadcast is time frames.
Well, that's what he said.
Yeah, and for a time frame, I mean, if you think this thing's going to 120, boom, you're buying it at 87.5. I mean, all the monthly. I mean, stop yourself out at 70, or take a starter position or something like that.
Well, that's what I was going to say with the time frame is that I think it's likely that you see a pullback in the next couple weeks or so. But looking at this chart, like the longer time frame chart, I still think long term this thing is going higher. So again, if I was looking at it as a swing trade for the next couple weeks, would I want to buy right here after it's up 30%? No, maybe not. Maybe I'd wait a little bit. But if I was
that's what I'm saying. I'm with you on BABA. I'm long Baidu, but the time was like 2 days ago. There's certain times to strike. So if you're like, yeah, BABA's going back, we went from 85 down to 77 on the earnings. You had 8-point sell-off there. That's a 10% sell-off. That's the time to strike. And that's when everybody was selling, panicking, and saying, oh, the BABA earnings. The BABA earnings weren't that bad. They just decided that they were going to sell them. The Baidu earnings were pretty darn good, too. I said that on the show. And look at what Baidu's done. Went all the way down to like 104 handle that day, and bang, it's right back up at 112, and the key reversal looking higher. I mean, I'm with you. I think Baidu, I'm long Baidu. I'm starting, like I bought even more Baidu. So I'm like actually starting to be a bigger than a full-size position in Baidu. So I'm fairly convicted.
Bigger than a full-size position.
More than a full, yeah, but it's so you know how I go. When I'm not convicted, I put a half size. If I really kind of like the story, when I'm convicted, I go full size. When I'm really convicted, I go like a double size position. Baidu's probably approaching that for me because I've bought it 3 or 4 times. So in my long-term account, not trade, long-term account. I'm with you. I think China's too cheap. I think, they're doing robo-taxis and stuff over there. They're doing so much Baidu, and then they just hammer it on the good report because it's China. Baba was the same thing. They hammer it. The report was fine, but it's China. We just hate China. Well, the difference is they bought it back this time. So it's good. And I think you're on the right side of the trade here. But there's always opportunities, it seems like, to get another dip. Baidu and Baba just gave us that opportunity 2 days ago. Now they pop. Maybe you get a little bit of dip, and then you come in. You're buying dips on strength, on strong stocks. You're selling rips on weak stocks. That's the overall core strategy. So I don't want to buy Baba when it just rallied 10% in 2 days. But it pulls back 83, 84. Yeah, and maybe you're chasing, and maybe you don't care. If you're $120 target there, you're buying at 87, you don't care. But it's nicer if you buy it at 84. Even if it's going to 120. So timing is still everything. And I think even in the long term, I think you're still buying dips at reasonable valuations.
And I just, one other thing, we could, if you want to do technicals on those, what else is going? I mean, we're talking about the individual stocks, Baba and Baidu, but what's going on in the macro situation? What's going on in the big picture?
So China. Oh, sorry.
Go
ahead.
Go ahead.
China a few days ago announced a big $100 billion plus bond sale to help boost the economy. And I think it was Scaramucci when he was on said, you can't do that and start invading Taiwan at the same time, right? You're either doing this economic stimulus and borrowing money and doing this, or doing the war game stuff. And it sounds like, China's making a decision to do more economic stimulus. Then today you got another headline that said China is going to be throwing $40 billion to the property market to try to alleviate this real estate crisis they have. I mean, we had that whole Evergrande thing. So all the things that I think that with the risk, the inherent risk with investing in China, whether it's the Taiwan risk or this economic problem where their, population is growing and the real estate's all going to collapse and stuff. China, at least it appears like, is taking steps to try to, help those things out. And that's, of course, lifting the stocks. Now, the question is just how much do you believe this stuff is actually going to help in the long run? And do you take it at face value, all this stuff? Either way, I think just from a pure, the storyline, I think is starting to shift where I don't think you hear as many investors as worried about the geopolitical risks. You had Tepper coming in being long China saying that that's his biggest position now and stuff. So I think the kind of vibe is starting to shift a little bit on the China story. So I think it's
QE, baby. Just throw money at it.
Yeah, take a page out of our book, right?
But she's on the line with Powell, and Powell's going, "Oh, this is so easy, man. Just flood it with liquidity." And that's what happens. Pop up the real estate prices. That makes everyone feel good. I mean, they're catching on. They're making nice with Russia, which we can't be that happy about. But
they've
whatever.
always made nice with Russia.
Yeah.
The narrative is that you just spoke of, AB, is me in a nutshell. I've talked geopolitical risk with Chinese stocks on this show for 3 years. I've stopped and thrown in the towel on that because I don't think an imminent invasion is happening here. And that's why when I look at these companies from a fundamentals and pick your stock, Baba, Baidu, JD, Pinduoduo, whatever, they're all so ridiculously cheap that, geopolitical risk would tank them. I mean, if they invade Taiwan, these things could fall 30, 40% in a day. So there is that risk out there, but I think it's very minimal. It's not talking it doesn't feel like it's imminent. It doesn't feel like an invasion is imminent. So if you take the geopolitical risk off the table, which I'm temporarily doing in the short run here, these things are all just too cheap.
Yeah, you almost have to be you have to be buying the stocks if you take that off
the
table.
Yeah, if these I've said it before, if these companies were in the US, I would own them all. Every one of them. JD, Baidu, Baba. And if you're all of a sudden thinking there's not that much geopolitical risk right now, why not own them? It's why I've been adding to the Baidu. I thought about adding to Baba too, but and I have EEM, which is obviously diversified not just with China, and it's done pretty well lately too. But obviously, it's all emerging markets, FXI if you want direct exposure. But I mean, on dips, I think you're adding to risk here. I think you are. I think the bottoms, are in here. I think they are, unless we get an invasion of Taiwan. The stocks are just too cheap. Baidu's trading 11 times earnings. It's the biggest AI play in China. I mean, if you could get a play like that in the US at 11 times earnings, please tell me about it, because it doesn't exist. But it does over there. And I just look like, I'm like, holy, they're just sleeping on Baidu with AI so much. They got robo-taxis already going on. They got, so many other AI things cooking there. The stock was $350 back in 2021, and it was a bubble, but it still was never like trading like 50, 60, 80 times earnings. I mean, if this thing expanded to just a US market multiple, it's a $250 stock.
Yeah.
It's a $250 stock. It could double.
Gabe Fade in the chat is making a point that I've made before too, and basically just that the reason that I've always been on the other side of not worried, but I've not been worried about China invading Taiwan. At the end of the day, China is still our biggest business partner, whether we're adversaries or, friendly with them or not. We do the most business with China out of any other country. If China invaded Taiwan and it started this thing, what happens to Tesla stock? What happens to Apple stock? Those start coming.
Everything.
They'll get hammered too.
Exactly. So at that point, like
sure.
your risk, then if you're looking at the risk reward and saying, okay, well, these Chinese stocks are cheaper and the American stocks are going to go down on this invasion anyway. Like, it starts to kind of even out the risk a little bit. I'm not saying that Tesla and Apple would go down as much as Baba and Baidu would, but they would still get crushed as well. So like, I don't know. I've thought, for a while now that I haven't been worried about a Taiwan invasion. Now, I could be wrong and this could happen next week, but I'm willing to put my money behind the fact that like I don't think it is, because I'll always bet on this like big binary event that's like gonna change the world landscape.
How can you? If China invades Taiwan, then there's a lot bigger problems.
Right.
There you having Baba, FXI, and Biden
as like 10% of my of my portfolio. Yeah, there's a lot.
I think it's prudent. I think AB, I'm agreeing with everything you're saying, and I've changed my tune here too in the last few months, and that's why I've been saying, and I've been on to Baidu. I would buy Baba on dips. I would absolutely buy Baba on dips as well.
You're talking me right into it. I mean,
I honestly think like it's the best. It's the best value. If you're just a pure value trader and you got rid of geopolitics, China is the best value maybe in the whole world right now. It may be the best value. If you're a core value trader, like how's Warren Buffett with all of his cash that he's got? I guess he just invests in North America. Like,
Japan,
but he invests
he's got Japan.
How does he not look at China and just think like,
they did.
This is like
he did
10 years of like going nowhere.
They had Baba too. Munger bought Baba and said it was his like worst trade ever, and that was like one of his last big trades before he passed away. So I wonder if Buffett is like, oh, I'm not going to touch Baba because that was like one of Munger's last things. Oh yeah, and Buffett of course has BYD as well, the EV manufacturer in China. But yeah, Munger was in Baba and got out, lost a lot of money on it, and then said it was like one of his worst investments ever.
So FXI back in 2008 was $73. It's $29 here 15 years later. It did nothing in 2010 to 2022. It basically traded in the 40s. We're lower than that now. I think even having an oversized position in China right now actually makes a lot of sense. I think it does. So I'm on this show telling you on dips, I'm a buyer of China. And I already am in Baidu, but you've talked me into it more, AB. I think I'm going to start looking harder.
Oh, don't say that. I don't want to be on the hook for this. Come on. If it goes,
you're on the hook.
If it goes up, it was me and I told you to do it. If it goes down, I'm telling you right now that, this is not financial advice and I'm just talking. I don't know what I'm talking about. But last thing on China
know what you're talking about, and you're correct with this assessment. The geopolitical risk is very low right now.
And then we should do one stock before we bring CC on. Okay.
Go.
From a risk reward basis. Okay. IWM, FXI.
FXI all day.
Okay.
Way more upside.
I like both.
Way more upside. The return here is if people start thinking like we are, that the geopolitical risk is a lot less than we're giving it. There's a lot of money managers that are underinvested in China. and that money could come back in. And then if you're looking from value, like let's go exercise here. And this is important because we haven't given China this much love here on the show. We've given a lot of hate. But, you know, this is like a turning point. Not saying chase it today. Wait for your dips. But Alibaba, PE, if we believe the numbers. You hope you believe it. The forward PE is 10. Baidu, PE. Forward PE is 11. Pinduoduo, which has been the darling, maybe it's a little bit higher. Forward PE is 16. Oh my gosh, you're paying 16 times earnings. I think S&P's, what is S&P, 20?
Yeah.
21? JD.com, just going through, 10 times earnings. JD.com, 10 times earnings. Who else do you like? Give some more China picks. Not Neos and the ones that are just the
well,
smaller
the one I was going to bring up is actually an American company, or maybe a Canadian company. And now I feel silly because I'm pretty sure it's a Canadian company. But Goose, which reported earnings yesterday, Canadian Goose, which is a huge, no, GOOS, I would think it is.
Yeah.
GOOS, yeah. They're on my lawn right now. They're always on my lawn. They're always out there. They're pooping on my lawn. My kid's got a blowhorn. He goes chases them away. There's so many Canada geese. You want to know? There's Canada geese. They have babies right now. We counted.
These are coats, Dennis.
I don't even know how this is possible. But the one pair of Canada geese has 31 babies. How is that possible?
Wait,
like
every time
they have 31 babies?
Every time they have 31?
I don't know. I've never seen that many. Like, my wife's like, overachiever. I'm like, holy crap. Usually but you know what happens? They have a lot of babies because I think a lot of them get pecked off. Usually by the end of spring, there's like 4 or 5 left because they're basically food for everything, those smaller babies, once they get to full size. But they just have so many. The Canada geese are just everywhere. There's so many Canada geese. So I'm almost like, and I'm fighting the geese all the time. It's almost out of principle that I can't buy this GOOS stock. I just fight the Canada geese nonstop.
You guys have gone off the rails here.
I
don't know. I don't know where you went from. I don't know how you went from China to Goose.
How did you go from China?
Because Goose is a China play. Because Goose is one of these.
What?
Oh my God, Goose is one of these brands. Okay, so China, you know, the Chinese people like have certain American companies or North American companies that they really like. You know, like Nike. Like Nike does a lot of sales in China, and Canada Goose is one of those companies. They like the luxury American jackets and stuff. And so Thomas Hayes from Hedge Fund Tips actually gave this to me as like a China recovery play. And Goose reported earnings yesterday, and the reason it's up is because they said their sales grew in China.
Wait a second. Is it really cold in China?
That's what I'm saying.
China? Have you ever tried on one of those Canada Goose
down
coats?
jacket in
China?
Oh
my gosh. I tried one on in the store. I was looking for a winter coat. I mean, my pits were sweating after like 2 minutes. I'm like, I could never wear a coat like that, even if it was like 20 degrees below. Those things are just too warm.
I guess northern China's cold.
China's a huge country. Of course, there's parts that get really cold, but I think it's more
if
about
you said Russia or something. You know,
yeah, that makes sense.
Yeah, I don't know about that. Look, you know what? Maybe we should bring CC in here.
Yeah, bring us back on the rails. CC's ready. He's
not ready. He's not ready.
He just got up and left. I see him with the back. Oh, there he's back. He's back.
I need a break.
Done with this Canada Goose conversation. Bring CC. Options expiration. Perfect day to have CC Lagator. Let's go.
All right, CC. I saw you in the background there, getting up, going down. You're like, man, maybe I should call in sick or something. You know, these guys.
You know what it was? Right as you were about to bring me in, my Alexa went off. So I had to run over and tell Alexa to turn off.
Oh, little Alexa interrupting us there. Do you have a Goose jacket? Do you have a?
No, but what's interesting about that conversation? So I live in Colorado, right?
Yeah, you need one.
No, well, so what ends up happening is if you go up to the ski resorts, so nobody really wears that brand here. You know, everybody wears Patagonia, Arc'teryx, you know, North Face, things like that. But you can always spot the wealthy tourists at places like Beaver Creek and Vail and Aspen, and they're all wearing the Canada Goose stuff. So,
really?
And you can tell they're from New York, LA, or Mexico City, you know, and now China,
Beijing.
I guess. Yeah.
Well, yeah, I saw that Canada Goose closed its store in like Aspen or somewhere, and I'm like, what do you think this is the perfect place for it? But like you said, the people that live in Colorado, they're doing the other big one I see all the time is what's the HH one, like Huey
Helly Hansen, yeah,
Helly Hansen, yeah, people like that one as well. What do you wear when you ski?
So I have, what do I have? I have like Arc'teryx, I have Patagonia, I have like everything, right?
This is what we bring CC on for, is to figure out the fashion on the mountains. All right, Joel, take us away.
Yeah, we love you having you on Options Expiration. Thanks for joining us. You got a scenario for the most part. The market's at their highs and the VIX at its lows. What should that signal to investors?
Yeah, well, it's interesting. I mean, it's like what a difference a month makes. Last time I was on was the last expiration, and it was kind of chaos. It was the VIX was like pre-market 21. I think USO was up near the highs. TLT was like, seemed like it was crashing down below 90. Dennis was running the show by himself.
Oh yeah.
Aaron woke up in a jail cell. And so it was like, yeah, it was like chaos.
Good summary.
And then it couldn't be
I was worried about that. I was worried about that. I did. I called Luke. I called Aaron. I almost called Jason. I was I was worried, man. I was worried.
You're never gonna live that down.
It was Apple.
I blame Apple as well.
Yes, but
I'm the only one that believes the AB on the Apple. I believe you, because it happened.
It's funny, Dennis, if you remember that show, we were kind of like, and then Christian came on, and we were like, it all kind of happened overnight, right? And those are the kind of signals, with the VIX, with everything sort of like puking overnight. And we were like, if it happened in the middle of the night, does it count, right? Usually you want to see that like on the open or something like that. Well, it ended up it did count, right? And that was sort of the beginning of this. But now, I mean, that was the VIX 21 last time I was on the show. Now it's 12. It basically doesn't really get much lower than this option volatility, right? And what happens in situations like that is when you have those big spikes in fear and vol and people buying puts and all, and then it kind of, that was leading up to the FOMC, the jobs number. We had like a big week. All those big cap tech earnings were right after that, right? And all of that comes through, and everybody just turns around and sells everything. Nobody wants puts. Nobody, everyone just sells all that option premium, and it absolutely hammers the market with option premium. And that's where we find ourselves today. I mean, the market the last 2 weeks has basically been sideways, if not a slow creep, except for the CPI day, right? We've had those economic data jump days, but everything else has just been sort of this sideways slow drift, right? And that's like the feeling of all of that option premium just loading up the market right now. And it gets worse today, like into the close. So are we we're right on, like, are we unchanged right now, pre-market?
Yeah, pretty much.
Yeah, we're up a tad. Tad. I just want to mention one thing, because I was on vacation on that day. But do you guys remember, because we talk our technicals and we talk, earnings, and we talk about the Fed. But do you know what happened that Thursday night? What the catalyst was? Because the SPOOs went down, I think, to 40.
It was Israel and Gaza and stuff, wasn't it, Dennis?
It was Israel counterattacking.
So. Oh, Iran.
Yeah.
Right. It was Iran. I forgot about that.
Yep. So there was a catalyst. It's not on your charts. It's not on your fundamentals. Yeah. But that was it. And you're overnight. You're like, oh, well, I got to wait till it come back down to I wasn't here, but it's going to come in. It never came in. It never came back. So I'm sorry, CC. I just wanted to mention that.
But then you look, what's supporting this rally? Obviously, that was right around the top of oil. Like, you can pull up USO's chart.
Oh,
right around there. And TLT, the options market basically right now is predicting nothing for a very long time. Like, volatility is really low in the options market. You can almost go out to like the election in the fall. And it's basically, you know, and options they're pretty good at predicting like near term, you know, like the next week and the next 2 weeks. Options aren't great at looking out a couple of months. But right now, options volatility is just dead across the board. Nobody's buying puts. The expectations for, you know, rallies are, you know, like people are selling calls and buying stock right now, basically. And so it's a really interesting setup. And what that setup feels like in a market is it's generally right for a while. And so it is slow grind higher, basically. And it's the type of market that feels like SPX that goes up 50 points, goes sideways for 2 days, goes up another 50 points, goes sideways for 2 days. You know what I mean? And that's what this market and that's what the options market is pricing right now, is that exact kind of action where it's like you walk in, maybe there's an overnight headline like geopolitical or even, you know, macro that's not like a total game changer. Futures are down 0.5%. They get bought. The market finishes somewhere near unchanged or just down slightly in the red. That's the kind of environment we're in with options.
So what do you think happens today? Like, and I'm not throwing you under the bus, but I kind of am at the same time. I mean, what are you seeing? It's obviously this seems like a nothing burger here in the pre-market. We have a big options expiration here happening. Is this like the calm before the option storm here at CC, or do we just see more of the same, this, you know, slow, steady grind and, you know, not going to be a lot of fireworks here today?
It's a very high probability that we finish right at 5,300, right? And that is just the power of all of that option premium, you know, and it might try to make a run and it might end up, you know, 10, 15 points away from that strike. But that is the most likely scenario, is we literally just go like this. And the way you can sort of tell that on a day chart, it's kind of fascinating. It will be like a big move at 9:35 Eastern, big, you know, maybe the reverse move, and then they just start getting smaller and smaller throughout the day. And it's just basically every time the market makes a move higher, market makers have stock to sell. Every time it makes a move lower, they have stock to buy, and it just starts compressing throughout the day. So that's what I look for. Meaning, you know, if you're day trading this market, it's like, you know, sell that rally, buy that dip intraday, and see if that's what happens. And then you might find yourself right at 5,300 at the end of the day.
CC, I mean, talking about, you know, is it as simple as people say when you're looking at the VIX? Like, you want to buy options when the VIX is low, you want to sell options when the VIX is high. Do you view it like that? I mean, is it really that simple when you boil it down?
No, it's okay. Actually, this is a great point, and it's sort of what I was. Sort of what I was saying about options are really, options are really good at pricing the near future, and they're really bad at pricing out on the calendar, right? So they're really good. Like the VIX being 13 or 12 right now, it's almost 12, is going to be probably pretty right for the next week or two. And it's basically pricing that the market's not going to move very much, right? So in that case, you're selling super low IV for the next week, super low premium and options, but the market's going to cooperate most likely, right? But it is low VIX all the way out on the calendar. It's low vol all the way out on the calendar. So you actually will probably be right if you're looking out a couple of months, right? Because they all kind of have to go in unison. And that's where you see the market inefficiency is out on the calendar. If you go out a month and a half or 2.5 months, I was looking at options yesterday in, you know, you can go out to August in, you know, SPX or SPY or Qs or IWM or anything. And you can get such close break evens if you're buying a put spread or buying a call spread, that you only really need the market to move like 4 or 5%, and you have all summer for it to happen, right? That's the inefficiency in the options market, and that's what you want to be buying. But when the VIX is low, I'm generally an options seller near term, and I'm an options buyer longer term, if that makes sense. And then vice versa, when the VIX is 30, it's kind of terrifying to be selling options that week, right? Because the market's going to be moving 600 points a day. But you know, if you go out a month and a half and you can stomach it, then you're going to make a lot of money selling options. You know what I mean?
Yeah, and I mean, I want to I guess taking it away from just like today's price action and like having a more general discussion about like, say I had $100,000 in an account and I wanted to do. I'm used to just buying puts or calls, and sometimes they work out and I make a lot of money, but most of the time they don't. What if I wanted to do more like high probability options trades? I mean, you hear about like a wheel strategy, which that makes sense to me, selling puts on stocks you wouldn't own, but like, what would you advise me to like play around with to try to find a high probability strategy that I'm not trying to double my account, but maybe make like 1% a week or something like that and start kind of growing that way?
I think the best thing you can do is not separate the two, like your portfolio and your general market trading and investing. If you don't separate that from options, if you just go in and you say, I'm going to do all options and I'm going to have a strategy, the options market's really efficient, right? And you're going to sell, you're going to be a seller every day, or you're going to be a buyer and, you know, try to time. It's really efficient. The math is really efficient. If you are long the market overall, which most people are, and you buy low and sell high, and you mentioned the wheel strategy, that's the sort of hidden reason why the wheel strategy works, is the people are buying low and selling high, and then they're selling option premium against their portfolio, right? And they're doing it in two ways. They're doing it by selling a put, and then they're doing it once they're assigned or long the stock, they're then selling calls against that underlying. So what I always tell people with options, it's like, you're long the market, long stocks, sell call spreads, sell iron condors and all against that long. Be long delta over time, and then try to use options to buy low, sell high, and create income on those stocks and on that portfolio. And it's one of those ones where it's like, you can add yield, you can add edge. There's ways, even with, you know, let's say you bought a stock and it tanked, it had a bad earnings, and it went down 20%. So your cost basis is like up 20%. There's option strategies like buying a 1/2 call spread, which can lower your cost basis like halfway of that move. And then when it goes back up, you have that leverage the whole way, and you can do it for like next to nothing, right? And so that's the kind of really cool stuff about options, I think. And I think the mistake people make is they're like, oh, I'm going to go day trade options in the SPX and I'm going to time it throughout the day. And it's like, well, you got to be really good at something else for that to work, right? You got to be really good at market timing. The options part of it doesn't even matter, right? So now there's just some popular stuff right now with like the 0 DTE. We've talked about that on the platform. And what they're generally doing is, again, they're being net short premium, right? Those types of traders, which over time can, you know, it can be pretty successful. But again, I would not do that in lieu of owning stocks, right? It's part of it. It has to be part of it. But you've got to, you know, you've got to own stocks, right? It's like the only like guaranteed thing over time, right? And if you can own stocks and sell options against it, you're going to do pretty well over time.
Pick good companies to do this on, though. Like some people were pointing out, you know, some people were doing this on high flyers, like meme stocks. Like, I mean, when you have a stock that falls 90% over the course of the last couple of years, that wheel strategy is not going to protect you from those losses. They will turn to real losses. So I think your strategy is sound as long as it's on good companies with reasonable valuations and not something that's just, you know, skyrocketing. It's like, oh, I get all this premium in GME. I'm going to do a wheel strategy, or AMC. I'll do all this premium in AMC. I'll do a wheel strategy on this puppy. And then she goes from $700 to $500, and you're down 99% of your money. And you're like, oh, that didn't work.
Well, so this is a great point. So I have a video on my YouTube channel, and it's like the wheel strategy 2.0. So exactly what you just said, Dennis, is the problems I have with the wheel strategy. And this is one of the problems I have with the options market and regulators. This isn't recorded, is it? That they put, you know, sort of like beginner traders into things like you're allowed to do a cash secured put. You're allowed to do a covered call and things like that. That cash secured put has a lot of risk. And I think a lot of people don't realize, like, if you're selling something at 90 cents, but you could be down $20 in it, you know, if the stock goes through it. So I have this video, and it's like the wheel strategy 2.0, because the underlying themes of the wheel strategy are very smart. It's like buy low, sell high, sell options premium. It's perfect, except for getting totally plugged in a stock like what you were talking about. And so
like plug
level 3 option, like plug, level 3 options allow you to do it with spreads, right? So you sell a credit put spread. If it goes down 20% through your strikes, you just lost between those two strikes, right? You're not put the stock. If you want the stock, you can just buy the stock that next day, down 20% instead of down 10%, right? And then on the flip side, once you're long that stock, let's say, and it goes back up, instead of selling just a call against it and then watching it go up 20% through your call strike and being like, I can't believe I sold NVIDIA at 700, sell a credit call spread against that underlying, and it's just the opportunity cost of that $5 or $10 in NVIDIA if it goes up through it, right? And so I'm a huge proponent of replacing the wheel strategy with just spreads. Like, do a credit put spread, do a credit call spread, buy the stock anytime you want, right?
All right, CC, before we let you go, we talk about catalysts. One of a major strategy at Dennis, a lot of people on Wall Street, is playing a stock into earnings, right? The alpha, right? People like NVIDIA. You see what that does at earnings. I'm going to buy it either into earnings, or you can hold it through if you have it in your portfolio. Different ways to do it. May 22nd, NVIDIA earnings. Talk about expectations or potential strategies going into that event.
Yeah, it's fascinating. It's funny. I was mentioning earlier, the options market is like not pricing anything in the future. The one day it actually is pricing stuff is NVIDIA's earnings. So I think they're Wednesday, and it's the vol for the following Thursday morning is higher than the rest of the week. So, and it's funny because you're like, all right, is that just because NVIDIA's market cap is going to move the market, or is it like an overall vibe check on the market? You know what I mean? And it might be that, like, if NVIDIA just skyrockets and becomes, you know, the new real meme stock, does that take the market to like crazy new heights? Or if it disappoints, was this the top, right? So it's possible that's what options are pricing. In NVIDIA itself, so options are pricing about a 9% expected move. And that is, I'm just looking at the chart right now, that's about like 860 on the downside and like 1035 on the upside. And that's, you know, that's for basically a one-day move in NVIDIA. And you can imagine what that would do to the market and what that would mean in the Qs. Somebody can do the math in the chat. As far as like trading, it's very, if you're holding the stock, if you're holding NVIDIA, again, this is another, I'm going to be like, sound like an options spread salesman here, although it's kind of what I do. But, most people are not long 100 shares of NVIDIA, right? And so options, because of that 1-to-100 ratio, a lot of people are like, oh, I can't do options in NVIDIA against my stock because I only own 8 shares of it or whatever.
Yeah.
But with spreads, you actually can, right? And you can do stuff within, like, you could buy a put spread and compare it numerically. Like, I'm risking $500 to protect $800 of my NVIDIA investment or whatever, right? And so you can compare it numerically, and that might end up being that you do 5 of those spreads in NVIDIA when you couldn't even do 1 against your stock. And it's the same thing with, do I sell covered calls against it? You can't sell a covered call against 8 shares, but you can sell a $5 wide credit call spread against NVIDIA, right? And so that's the other reason, it's just so much more flexibility is that, what percentage of NVIDIA shareholders own over 100 shares? I mean, like,
very low.
Yeah, 5%.
You have 90 grand.
Yeah, exactly. So that's the other cool thing about options around an earnings of a stock that's so expensive is, buy a put spread and compare it. How much am I risking to how much am I protecting of this investment? And then how much of this underlying, like, do I own $25,000 worth of NVIDIA then I want to protect $1,000 of it or something like that, right? And that's the good way to think about options trades around an earnings. And then in general, if you're just trading options around an earnings in general, it's like you don't want to be a buyer of options generally, because that volatility will generally come in 50 to 60% the next morning, and all that premium goes like that.
Okay, I think I found the video here. People are asking for it. It's the Options Wheel Strategy 2.0. Is that it?
Yep.
Yeah. So what I'm going to do here for our listening audience here is I'm going to pop this in the chat. And then I'm going to say a big thank you here to CC Lagator joining us here for an extended session here on pre-market prep on this options expiration. After the show is over, I'm going to send an invitation for you to come on for the next one. And that will be a nice one because that will be a quad witch.
Quarterly. Yep. Exactly.
Yep. So fantastic, CC. You are by far the best options guy we've ever had on this show. And we look forward to having you on again.
Thanks for having me, guys. See ya.
Bye, CC. All right, guys, that was CC Lagator. Thank you to him for joining us as he does almost every options expiration day. Great to get his insights. All right, we got about 2 minutes left. Joel, we've got some horsey talk. Also, a quick update. Scheffler did go to jail. There's a mugshot going around Twitter, but apparently he is on the way to the golf course now, so they let him out early. I don't know. I mean, it's literally a crazy story. I'm sure, lots of stuff on Twitter. The golf media will run with it all day, but let's get to the horsies. Joel, give us a quick Preakness preview.
Well, before you do that, we just want to talk AMD, and then we're gonna finish up because AMD is having a day here. It's up $5, and you'd be like, "What's going on, AMD here?" Well, there's news. Microsoft is offering cloud customers an AMD alternative to their NVIDIA AI processors. So why are we even talking about competition coming for NVIDIA and AMD maybe eventually being the number 2? Microsoft obviously believes so. They're putting their money into some AMD AI chips. So that's why you're seeing AMD pop up here today. Full disclosure, I'm still long NVIDIA, still long AMD. Don't plan on selling them anytime soon.
The level that I talked about yesterday did not come into play yesterday. No, actually it did. It got above it. There was multiple highs, 165 area. I'll just say there's a little congestion up at 172. I mean, the way this thing runs, I see 1, 2, 3 highs stalking the 172 area. If you're looking for another target on AMD, after that, 182.05 is your next daily high in AMD.
All right, guys, it is 1 minute till 9. Yeah, Joel, do we have time for a quick preview?
Well, I'm a little disheartened after getting smoked in the Derby. My horse had just a terrible race. The 2 favorites are out. Mystic Dan won the Derby. I'm just gonna, I'm gonna go with him. I'll go with some exactas because I want to see a triple crown. We haven't had a triple crown since 2018. In fact, no horse has won both the Derby and the Preakness since 2018.
Who was that horse? I forget.
American Pharoah?
Pharoah was 15. Justify was in 18. And if you want another trend that has played out for the last 3 years, a horse that did not run in the Derby has won the Preakness. Baffert scratched his horse because it has 103 temperature. Wink, wink. So Mystic Dan, Catching Freedom, was 4th in the Derby. He won the Louisiana Derby. So just going to go light with, some exactas around that. But I wasn't too interested in it. I started talking to my buddy Ira about it, and he was like, what if we get a shot at a Triple Crown? So I'm going to go on the rah-rah Triple Crown bandwagon.
Sounds good.
Yeah, what do you got, AB? Are you going to let me know after the race?
Yeah, because he picks the dang winners, and then he tells us afterwards, throws the fuck at him. Who are you going?
I don't know yet. I got to look at the board. I know.
You don't even know yet.
We got Sierra Leone running again. Yeah, we'll see.
You know why you look at the board? Because of the late money. of the late money.
Exactly.
Well, that's smart to do. That's an edge. You wait till the end. When I used to do the horse races, Joel, and I'm never a huge horse racer like you, but back in university days, I'd always look at what the paper looked at, and then I'd look at the board, and I was like, if I see an edge where they're paying a lot more on the board than they are with the odds coming in, I'm going on that one. It never really worked for me, but that was my edge. I was always trying to find an edge.
I like that. Well, Joel,
you know what first track I ever went to? First track I ever went to, Dennis?
Windsor.
Yep. And my sister and I went 3 for 3. We just bet on 3 horses, and the last horse was our horse, Roy Scott. I got a picture from Windsor Raceway, Chris Boring into Salty from 1969.
Yeah, they closed that. I believe they closed Windsor Raceway down. I believe.
Yep, they did. They did. Okay. On Monday, we're going to talk commodities with Angie Setzer. That'll be interesting, and just another fun week coming up on pre-market prep. So
awesome.
Thanks you for joining us. AB, be careful out there in Vegas, okay?
I will, yeah. If anyone's in Vegas this weekend, I'll be there hitting Dead & Co. Saturday night at the Sphere. Excited to check it out. That's a public company, so I'll come back with a full report on the Sphere on Monday. All right, guys, thanks for tuning in. We do have live trading starting up right now. Faluna's taking over for me. We'll see you guys there on Monday. Please smash the like if you haven't already.